Hey everybody, what's going on? It's James here with Crypto Common Sense. Decided to shoot an extra update video this week. So this video is going to be for Friday, October the 23rd, and we're going to talk mainly about Bitcoin today. So before I jump into the content, please do me a huge favor, hit that thumbs up button. Make sure you subscribe to the channel if you have not already. And of course, don't forget to check the description for a series of links where you can support the channel. Also, it gives you access to more frequent updates. You can learn to trade down there, and you can join my favorite exchange. They'll give you a bonus for using my link. I think it's up to $120 depending on how much you deposit. So, Bitcoin. Okay, here's the deal, guys. I shot a video, I guess it was yesterday, the day before, and the video seemed to get a pretty warm reception. Just talking about staying logical and, you know, trying to keep your emotions at bay the best you can when these things run up. Those of you that left comments, appreciate you as always. That it not only does it help me out with the algorithms, but truthfully, it's really difficult to do videos when no one's responding or no one's kind of interacting with you, because it's like, gosh, you know, am I wasting my time? So when you do comment, it's like, wow, okay, so you know, people are getting something out of this. So I appreciate that. So I want to kind of just kind of hypothesize some things, you know, kind of throw them out there into the world, and we'll all wait and see, you know, what happens with this. But I understand that, you know, some people think that I am a perma bear, and, you know, in all fairness, I don't think it's unfair to say that. You know, there's really nothing that is going to change my mind from being a bear with Bitcoin in the near term. There's no price, no magical price level that would make me suddenly flip bullish. So by some definitions, I think it's fair. I think, okay, well, that's what a perma bear is, somebody who refuses to switch their bias. So the thing is if you have been watching this channel for a long time, right, you will remember that I was always macro bullish. I was bearish, you know, all through the summer of 2019 and all through this chop, looking for that pullback to 4,000, but it was always with this bull heart, right? It's going to go to 4,000, and then we're going to finally start the real bull run, which so far seems to be what's happening, which is ironic. What switched my bias from macro bull to macro bear was COVID-19, and more specifically, how cryptocurrency and Bitcoin itself reacted to the crash in stocks. And I think this is lost on a lot of people. It's not that Bitcoin went down. It's that it went down in response to the stock market going down. The whole argument for Bitcoin is that it's supposed to be digital gold or a store of value. Well, your store of value shouldn't drop more than the thing you're trying to stay safe from. And the stock market fell about 30% or so over a couple of weeks, and Bitcoin fell like 50% in one day. Okay? I think sometimes people like don't really stop and do the math. Like, this was not a subtle drop. If you look at the drop from February, right, when the stock market started struggling, to the bottom in March, just a month later, Bitcoin lost over 63% of its value. In no world is anybody going to convince me that this is a store of value. Now, that doesn't mean that it can't go up in price. It doesn't mean that it can't have new all-time highs. It doesn't mean that people can't make a lot of money trading it, but it's not a store of value, right? People will say, well, gold crashed in March too. Very true. In fact, if we put a gold chart on here, we can look at them side by side. Gold is indeed an accepted store of value. So let's put this on a weekly chart. Let's go back to March. So where is March of 2020? Try to get this on there. Okay, so here is 2020. Okay, here's March. Gold, huge pullback. Not all that different from Bitcoin, right? Had the bottom back here, and both of these had the huge run up and then this huge pullback. So why can I look at gold and say, well, gold is a store of value when it had the same drop that Bitcoin had? Look at that, right? Mainly because it is, right? Look at the size of the drop. How much did it drop? 14.8%. How much did the stock market drop? About 30 to 35%. So you would have lost less money in gold than you would have lost in stocks. Therefore, it acted as what? It acted as a store of value. A store of value doesn't mean it's immune to drops. It means that it's safer than being exposed in the markets. Well, what did Bitcoin do back there, right? Gold fell 14.8%, Bitcoin fell 63%. That is not what you want to see, okay? Let's go back to the Bitcoin chart. So that's why I'm so, if you want to call it perma bearish, fine, that's what it is. What I think is happening, and there's a couple different scenarios that are on the plate. I'm going to look at this chart in real in depth in just a second, but one scenario is that crypto is going to become a real thing, a mainstream thing eventually. And companies, there are large companies making large investments in cryptocurrency, and a company like PayPal coming in is certainly a step in the right direction. If that's what's happening and Bitcoin is trying to make that move toward legitimacy, which, by the way, when you look at things like these derivative exchanges, getting shut down or suddenly being forced to do KYC, that's regulation. And regulation is what even though it's not fun, it is what you want to see for a market to become quote unquote legitimate, right? So all of that paints a really nice picture for cryptocurrency. The problem is people confuse becoming legitimate with price going up. It's not the same thing. In fact, it could very well be the opposite. During this move toward legitimacy, right, it could be that the market actually experiences some serious corrective moves, right, that take it way back down to old levels because of things like exchanges getting shut down, because of things like exchanges being forced to do KYC where they're losing 2/3 of their traders because those traders are in the United States trading when they shouldn't be, technically speaking, which, by the way, I don't agree with. I think you should be able to trade from anywhere, but that's neither here nor there. Okay, so all of that could be happening, and it could be a really bright thing for the future, but it doesn't necessarily mean that price is going to go up right away because of it. Okay, the other scenario that could be playing out is, and this is the first thing that went through my mind being as bearish as I am, is are we in the middle of an exit scam, right? Meaning, are the powers that be pumping this market so that they can exit the market knowing that the hammer is getting ready to drop, right? We already know that UK is looking at banning derivative trading, right, coming January of 2021. We know that Europe is looking at doing the same thing, right? US traders are already banned from trading on those sites, right? They have to go through hoops and use VPNs and everything else if they want to trade on those sites. And people say, well, the government can't regulate this, away. And I even saw somebody the other day trying to argue with me on Twitter that Bitcoin is the first digital currency, so we've got to cut it some slack. Well, for those of you that watch this channel, I would hope that you're doing your own due diligence like I plead with you to do in every video. First of all, Bitcoin is not the first digital currency. Not even close to the first digital currency. There were digital currencies around back in the 1990s. I was a kid in the 1990s. I was in high school. I remember these things, right? When the internet was first becoming a big thing, back when you still connected through dial-up modems, right? There was digital currencies. There is one specifically that actually gained quite a bit of traction called e-gold, right? And what happened? Why didn't e-gold take off? Why didn't e-gold become the thing? Guess what? The government banned it. So here you have it. If you go, Google this, you can find this for yourself. e-gold was the first widely used internet money, introduced in 1996, grew to several million users before the U.S. government shut it down in 2008. What happened in 2008? Think about this. What year was Bitcoin created, right? Bitcoin basically picked up where e-gold left off. And in fact, and this gets a little bit outside of my wheelhouse, but if I'm not mistaken, a lot of Bitcoin's algorithms and code is based on e-gold, right? The algorithms in e-gold. I can't remember the guy's name who coded this stuff now. We can go down a big rabbit hole on this. But he's on Twitter. Anyway, I'm getting off the rails here. Bottom line, Bitcoin was not the first digital currency. Digital currencies have been tried before, and the government has stopped them from becoming a thing. So we still have that concern, right? Is Bitcoin getting too big for its britches where the government could be coming in? I'm not saying it is. I'm just saying, that's something that, I want to be aware of. The other thing that everyone ignores when they're super bullish and when they're just permanent bulls, which is the opposite of me, obviously, right, is they ignore the charts and all they see is like the smaller time frame. Well, this is a higher high than this, and this was a higher high than this, and that's an uptrend. I agree. It's a textbook uptrend, in fact. Okay, but you have to look at the bigger picture. What do we see if we put RSI on there? Well, I see RSI making a series of lower highs going all the way back to 2017. I see momentum making a series of lower highs going all the way back to 2017. And I see MACD making a series of lower highs going all the way back to 2017. So price is doing one thing, but all the indicators, well, not all of them, but these three indicators, and I didn't cherry pick these, I just started putting indicators on there. I don't really like MACD, and I don't really use momentum a whole lot unless I'm confused about what's going on with RSI. But I mainly use RSI, lower highs. So then I put momentum on there to see if momentum agreed with RSI. Lower highs. So then I put MACD on there to see if MACD agreed with momentum and RSI. Lower highs, right? So I haven't seen a single person talking about this. And I talked about this, if you guys remember, if you watched the channel a while, I talked about it back in February before this crash. Because if you remember, I drew a line that looked just like this, and I said, watch out for this being resistance right here. Where was that? Right there when, a lot of people were screaming about new all-time highs and the bottom being in, and a lot of people disagreeing that we still need to go to 4K, right? People don't like to use trend lines on their oscillators. I don't know why, right? Somebody asked me one time, where I learned this. I don't know. I just started doing it one day and I realized, wow, trend lines and oscillators can actually be pretty good indicators. So we have all these lower highs being made in the oscillators and in the different indicators, but you have price doing this weird stuff. Why is price pumping? Don't know. I don't know why it's pumping. Do I believe in the pump? I still don't believe in the pump. Right? Is that a bearish bias? Could be. Could be. But guess what? Volume's going down, down, down the higher this goes, right? So at some point, something's got to give. Now again, I don't think Bitcoin crashes down to 1K or 3K or any of those lowball numbers unless the stock market crashes, right? I don't think stocks go up and Bitcoin goes down. I think that Bitcoin is riding the coattails of the stock market. And as long as the stock market goes up, I think Bitcoin's probably in another bull run. But I don't think the stock market's going to continue going up. And that's why I keep waiting for the other shoe to drop. Now, something that was interesting today was somebody asked me about this on Twitter, or actually pointed it out on Twitter. They just posted a Gartley pattern. I don't trade Gartley patterns. I'm far from an expert with them. I understand the basic rules and that's it, okay? And basically with the Gartley, what you have is you have an initial move down, then you'll have a move to the 61.8, then you'll have a move down to around the 88.6, and then this move is supposed to come up to the 78.6, and it's a bearish pattern before you get more downside, right? So remember, 61.8 on this move here, 88.6 in this move, and then 78.6. So let's put those on the chart. What would that look like on Bitcoin? Well, here's your move down, here's your move up, your move down, and we want this all the way up to 78.6. So basically, this number over here, we want it to say 78.6. So we'll go up, 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 up. That's about as close as I'm gonna get it, okay? So you get a pattern that looks like this. So let's measure this and find out, is this following the rules? Well, if we measure this top to the bottom, where did this stop at? 61.8. Okay, first rule has been met. And then from the bottom to this B leg, did it go down to the 88.6? There's the 88.6, that red line, threw a tail just through it. Second part of the equation has been met. So now, if this is indeed a Gartley, we should go up to the 78.6, which is at $16,304, okay? So whether you're bullish or bearish, right? Or what I should say is even if you're bullish, don't get mad at me for this. This is actually a good thing for you, right? It actually indicates that price may be going higher. all the way up here, in fact. It's possible, right? Certainly possible. And how crazy would that be? Lines up with this old weekly resistance back here. And then what happens after that is you get the huge dump, right? So that's a potential. The one thing I would point out about this, the one place where this doesn't make sense is, technically speaking, if this is going to be a Gartley pattern, according to the rules, this move here is supposed to go to the 78.6, yes, but it's also supposed to be a 1.618 extension. So that would look like this, and the 1.618 is way up here. So it can't be a perfect Gartley because it can't be this price and this price. If it goes way up here, then of course, you know, it breaks the 78.6 rule. So, you know, who knows what's coming? Who knows what's coming? Me personally, right now, I'm leaning more toward the fact that this is indeed the rising wedge that I first hypothesized a few weeks back, right? The one that looked like this. In fact, I kind of favored it like this because it had, you know, cleaner, looked like a cleaner line here. But some people would draw it like that. I think either way is, you know, acceptable. This one looks a little cleaner, suggests that it might still have a little bit of a pump left. This one looks more, I guess, textbook, right? It's from the actual top to the actual bottom. In that case, we tested resistance and are sitting underneath it, okay? And remember, this thing, well, if it is indeed a rising wedge, and we don't know if it is, just kind of like the bear flag that we were watching, right? It only becomes a bear flag when it breaks to the south. In our case, it broke north. This only becomes a rising wedge when it breaks out of it, right? Until then, it's just lines on a chart. But if we draw this over, right? And again, it depends on where we break out at, but it does put a target back down around 5,200 bucks. If you draw it from the top to the bottom here, that's one of the reasons I kind of liked it better like this. It gave it a smaller breakdown target, right? Down around 6K, but say that's the actual wedge, gives it a target down around 5,200. And then if you draw a horizontal line down there in that ballpark, now let's take that away. Let's put this on a daily chart again. And what's down there? Basically, we could retest all this chop and fill in that gap there, this gap up here, the CME gap that's down around 9,600. All those would get filled in. Okay. So pretty interesting stuff. So as far as stocks go, we're going to talk about those and something new that I've been looking at. This is going to sound kind of, you know, hokey pokey, but it is what it is. So I woke up today and I had this strange dream about. In this dream, I was watching television, which is strange because I don't actually watch TV. I only watch Netflix. But I was watching television in this dream, and there was an analyst saying that the markets were getting ready to have their worst crash since 1907. Now, that number didn't mean anything to me when I woke up. I thought, okay, that's strange. I didn't think that much of it, but that 1907 kept eating at me, and I kept thinking, why did I think 1907? So I actually started researching 1907, and I didn't even know about this, but apparently there was a really bad crash in 1907. So I don't know if I read about it once upon a time and forgot about it, and then my subconscious kind of brought it back up, or what the deal was. But so I ended up looking at charts, looking at the early 1900s charts, and when I did, I found something interesting. I found this, which is not 1907, by the way. This is 1901. 1907 was over here, okay? And by the way, if you look at this, all was good. Everything, you know, yes, there was a crash, but life went on. And the Great Depression, you know, started over here. But what was interesting to me was this double top. Let me show you why. So essentially on the left-hand side here, the market had went parabolic. It had ran up, had put in this high here, had retested it, you know, had put in high here, had come down and retested it. Well, if you look at our current situation here, we had put in this high back here. We had came up, we didn't quite retest it. Then we put in a new high, and in this crash back in March, we just retested this high. And depending on how long you've been watching the channel, you might remember that I kept saying that I thought this thing could go as low as 15K and come back down and retest this old level back here, which would be like a 50% drop, right? See that? like 52% or so. Well, this chart, that's literally what happened, right? It came up on this dead cat bounce, which went slightly higher than the old high, and then it completely crumbled all the way down to this old level of support, which in our case would be this level here. And what's happening right now on stocks? Yes, it is putting in a potential, we don't know yet, a potential double top. So if that collapses and sends us 50% down back to test this level back here, which was the top, by the way, you guys have heard me talk about this time and time again, how markets like to test old all-time highs. Well, this was the old all-time high on the Dow Jones before the financial crisis of 2008. That was the all-time high, and then it crashed. So what essentially this would be doing was coming down to retest this old all-time high, which is literally what it did in 1903, basically a little over 100 years ago. So I had never looked at this before. I've never seen anybody else talking about it. Could be completely way off base, but I found it very interesting. Now the good news is if we do repeat that, and we repeated it exactly how it happened, right after that, the market went completely nuts. Had another, and when I say completely nuts, I mean completely nuts. Look, 144% gain, had another giant pullback, and then to the moon, Alice. Look at that, right? So, I mean, even if you're a bull, you should be okay with this, right? Look at this. This thing from the old all-time high that it retested down here to the Great Depression, high right before the Great Depression, went up almost 1,100%. Can you imagine going up 1,100% from 14K on the Dow? We'll have to play around with our scale a bit, but let's see what that would look like. Oh, goodness. Jeez Louise. Yeah, that would be like 168,000. That'd be crazy, right? But I don't think that's going to happen. But anyway, let's just say hypothetically that we do get this, horrific 50% drop that I'm talking about to retest that level, kind of like what happened back here. That is the scenario where I see Bitcoin going down, right, to those sub 3K levels. And in Bitcoin's case, like I've talked about in the past, it's old all-time high. Of course, we all know this by now, right? We all know that the old all-time high on Bitcoin, well, first of all, you got to pull up a chart that goes back that far. We know that it was right back here at $1,158. So, I mean, is it possible? It's certainly possible. It does seem unlikely. There's no doubt about it. It seems unlikely that it would go that low. But if the stock market took that big of a hit, I definitely think crypto could take that big of a hit as well, right? Let's just say hypothetically that, it happens soon, right? You'd be looking at a drop of about 91%. Pretty steep to get all the way down there. But not unheard of, right? Not unheard of. If you look, and this bubble back here in 2011, Bitcoin fell 93.7%. And this second bubble, it fell 86%. And this next bubble, it fell 84%. And our micro bubble or echo bubble, it fell 71%, right? So these huge, 80, 90% drops in Bitcoin, they're not unheard of, right? They're definitely not unheard of. So I remember once upon a time I had a guy that I was learning to trade from who had like 30 years experience. And one thing that he said to me that's always stuck with me is tails like to be eaten. Meaning that oftentimes when you get a tail, the market will come back down and fill that tail in. Now, I don't trade by that rule religiously. I'm not near as, stuck on it as I am gaps, but it is something that's always stuck in my head. So for example, like this tail here, see how the market came down to eat it. This tail here, market came down, right? These tails, market came back down. So, we'll see this tail here. Look at this one. See it? Market came down here and filled that tail in. So it wouldn't shock me at all. It would shock me to go to 1K at this point. As high as it's went, as strong as it's been, it would surprise me. But it wouldn't surprise me to come back down to this range, right through here. That wouldn't surprise me. So we'll see. We'll see. The video's getting a little bit long, and I didn't intend for it to be long. I intended for it to be like a 10-minute video, so I think I will wrap up there. Bottom line, exciting times, exciting market. Whether you are a bear or a bull, I hope you're being safe and making sure you're making the most of it. As far as me, I'm just doing what I always do, right? If I want to trade, I'll trade on the smaller time frames, and I'm sitting on that HODL portfolio. Even though I'm a skeptic, even though I'm certainly not a believer, and even though I'm macro bearish, the plan is to sit on that HODL portfolio, not take profits on it anytime soon. Because if we're at the beginning of the bull market, I don't want to be taking profits. And if we're not, and it ends up being a bear market and going down, then the plan is to simply cost average, right? And add to that portfolio if it gets to those appropriate levels. But barring some extreme circumstance, probably won't be buying more Bitcoin, right? Probably just be sitting on what I have. As always, please remember, I am just some guy sitting in a spare bedroom, so nothing in the video is financial advice. You should always do your own due diligence and seek out professional investment advice from a licensed financial advisor before making any type of investment in cryptocurrency or the stock market. If you enjoyed this video, please be sure and give it a thumbs up. Make sure you subscribe to the channel, and if you have not already, make sure you leave a comment and check the description for ways that you can support the channel and ways you can get more frequent updates. This is James with Crypto Common Sense, reminding you to please trade safe.